Hey there traders, and welcome back for episode number 142 from the StockBandit.tv. It's a place you can always find trading videos to make you better. And on the weekends, we always take a look at the major averages, kind of get a good idea of some, overall big picture price action here, because we know that's what's going to influence individual stocks. So let's take a look at the indices here. We're going to start off with the NASDAQ, and last week, obviously, a pivotal week. I pointed out here a week ago that we were seeing these uptrend lines and we were approaching some short-term resistance, and generally when you see two trend lines like this start to converge and price getting squeezed between them, generally the longer trend line tends to win out. Well, that never took place last week, as Monday we attempted to clear some resistance, but we were unable to hold it. Of course, we moved lower on Tuesday, Wednesday, and Thursday and Friday. So pretty decisive move. We saw a good hard breakdown here last week through this uptrend line that goes back to the July 1st low. So had we seen a one-day break, that might have been one thing. And in fact, on Tuesday, we did undercut that trend line briefly. We did recover back enough to close back above it. However, on Wednesday, we got a decisive gap lower and we trended lower throughout the day. We saw another gap lower on Thursday, which did attempt to fill. It saw a partial fill, but we still finished negative on the day for Thursday and Friday. Also, we saw some increased volume last week with that selling pressure, so definitely some distribution was taking place as the indices gave back a lot of ground, and we've now seen a good technical breakdown here through this uptrend line. Now, what do we do going forward? Well, a couple things. For the NASDAQ, this July 20th low is at the 2159 level, and that did hold last week. We stopped at 2163 on Thursday, and obviously we closed last week at 2173. So we're hovering above this low, but that's not a major low. That's just kind of a level that for now is being respected by the market. But the real key is going to be down here. If we do get a test of this July low, that's going to be the big thing. If we can pull back to a level that's above that July low, then that would create an intermediate term higher low. Okay, this would be the low that we're watching. We need to see a low that stops short of that somewhere, a higher level. So we've got, short-term higher lows. That series has now been broken. Okay, we've now made a shorter term lower low. But intermediate term, the rhythm of this market is such that we are likely entering, this pullback phase here that certainly could lead to a higher low. So we need to keep a very close eye on that. In the short term, we are somewhat extended here after 4 straight down days and some decisive price action lower. We've got some room here to bounce, and logical spots would be up first to fill the Thursday morning gap completely. That would take us up to the 2208 level. If we do see continued strength beyond that, then we've got this this unfilled gap from Wednesday that would possibly take us back up to kind of test this breakdown area. That's about the 2277 area. So we're going to be watching this 2100 area if we do continue lower. But if we do see some kind of a bounce kick in this next week, then watch for these gaps to possibly get tested and or filled if we see some upside price action. There's a lot of damage that has taken place here. People who have been gaining confidence throughout this short-term rally after July lows are now very concerned, and a lot of them are underwater. We're now just, we've given back roughly half of that move here. It's going to be real interesting to see how this market responds, how traders kind of maneuver to see if they do step in and provide some support on this pullback at some point. The S&P 500, same situation here. We saw some distribution on Wednesday, quieter price action the remainder of the week, lighter volume, I should say. But here we have a good decisive breakdown here as well. We were seeing price getting wedged here between these two trend lines, resistance up here at 1131, and then this rising support, which was broken in a big way on Wednesday. So no bounce has been seen just yet here for the S&P. Levels that I'm going to be watching are the July 20th low right here, 1056, and if we do rally back up, I would expect this 1105 area to possibly get tested. So those are my zones I'm watching there. For the Russell, if we rally back up, I'd look for a possible test of this breakdown zone at the 639 level. Then we have the mid-July lows here at the 602, 603 area. So we're not far from there as well. Let's see if that level is reached, if it does get defended. The Dow holding nicely here for the moment above 10,260. That's been a big level here, and it's certainly being respected here the last couple of sessions. But here again, we've seen a good decisive breakdown as 10,600 was given up, and we're now kind of starting to consolidate here. So if we do move back down through that 10,260 level, the next spot is going to be this mid-July low right at the 10,000 mark, and that's a good psychological level to keep an eye on as well. Finally, the VIX, which is the fear index, is really starting to rise as well. It does have some resistance here in the 2750 area, but it does have some support here at 23. That's been tested a number of times from both sides. It was serving as some support. Once it was broken below, we did spend several days here beneath it, but now it's been reclaimed again. So now we need to be eyeing that 23 zone as possible support. So thanks again for joining me for this episode. I will be back soon with more trading videos, but in the meantime, trade like a bandit.